Having the ability to apply candlestick patterns to what everybody else is watching dramatically improves the probabilities of having portfolio positions established in the correct direction with a much higher degree of accuracy than merely buying stocks that appear to be going up. For example, look at the NASDAQ doing a J-hook pattern right here at a trend resistance level, implying that if the J-hook pattern wave 3, which should be the same magnitude as wave 1, is definitely going to break out into new territory, as we've witnessed. Having that ability to see that's happening allows the candlestick investor to be putting on trades that are doing the same things, that are breaking out. The same analysis could be applied to the S&P 500, where it was moving up and gapped up through the resistance level of a trend channel, with the implication right here that the uptrend was still in progress as long as the S&P 500 continued to trade above the T-line. The fact that it gapped out through this level gave us immediate information that everybody could see there was a resistance level, and when they gapped up through that level, it pretty much told us that investor sentiment didn't have any concerns now for that resistance level. And analyzing the Dow, which is in the process of doing a J-hook pattern, once again, if wave 1 and wave 3 are the same, it's telling us that they're probably going to be breaking out through this resistance level. When we say that it probably tells us it's going to do that, allows us to have much heavier weight on long positions, or even going after long positions that are in the breakout mode. Our recommendation on GOS this past week was because we could see the fry pan bottom setting up, and then a huge belt hold signal added new fuel to that uptrend analysis, that we could be buying in here with the expectation that this could be a strong breakout of a fry pan bottom, with the additional confirmation that the belt hold signal basically tells you they've wiped out a lot of the sellers. There's not as many sellers in front of any buying occurring. You can also apply additional strength to the uptrend by analyzing charts like Apple, that once it broke out through this little level, kind of a fry pan bottom, it was in an uptrend as long as it stayed above the T-line. Once again, there was a wave 1, wave 2, into wave 3 of a J-hook pattern. When you add up all the elements of what investor sentiment is doing, allowing you to much more accurately assess what the overall market trends are, using other indicators like the big stocks that are also producing bullish signals and patterns, it gives the candlestick investor that much more uh, confidence or aggressiveness to be establishing long positions when everybody else might be saying, "Oh, this market's overbought. We should be taking profits at these levels." The candlestick investor can be looking at patterns like Roku, the J-hook pattern, wave 1, wave 2, and notice what happened on the pullback of this J-hook pattern. They couldn't close Roku below the T-line. Now you have a gap up with the expectation of wave 3 moving back up to this level if it was the same magnitude as wave 1. Once again, candlestick analysis merely allows the candlestick investor to have their positioning in the right place at the right time. Simple scanning techniques allow the candlestick investor to find the ones that are breaking out, like DCPH. We can see how it gapped up on this T-line crunch through this resistance level, with now the strong expectation that the new investor sentiment has the prospects of making wave 3 the same magnitude as wave 1. This is merely identifying which signals and patterns create not only the high probability of being in the right direction at the right time, but also in the price moves that are going to produce the most profits. That'll be it. We'll see you in the chat rooms.